Hi there, Tyler Jefcoat here with Seller Accountant, and today we're going to talk about cost of goods sold. I want to walk you through the kinds of items that should be included in the cost of goods sold section of your profit and loss statement, and then I want to talk to you about how to actually calculate what is your landed cost of goods sold for a particular SKU or a particular pile of SKUs. So let me get myself out of the way here. First of all, let's just kind of think through what should be in your P&L. So this is just a sample profit and loss statement. On the sales side of your profit and loss statement, you need to have kind of gross sales for your channel. This is obviously an Amazon seller. Any revenue you get from shipping, any refunds impact that you might have, you may get some FBA reimbursements, and that's going to all total up to what your sales channel, the channel actually produced. You may have other channels. This particular client has very little happening on their website, but we have clients that have 9 or 10 different sales channels that might be producing revenue for you. You're going to capture that up. All of that's going to be captured in the top part of your profit and loss statement called the income area. But inside this red box, that very first expense area of your profit and loss statement is the cost of goods sold section of your profit and loss. And so there's a few different categories that we would argue at Seller Accountant need to really be included in this cost of goods sold section. The most important one is what we're going to talk about the second half of this video, which is what was the actual landed cost of goods sold for the products. I bought product, I purchased them, and now I'm selling those products. What did it actually cost me to land that product so that I could sell it? That's the most important category in the cost of goods sold section. Probably why it has the same title, right? But there's some other categories that at Seller Accountant we really like to see in our client's cost of goods sold section. One of them is directly attributable logistics charges. So for instance, an Amazon FBA fee, we have an exact dollar amount per unit. When I sell unit A has exactly $1.50 in FBA fees, pick and pack, that kind of thing. The other category is kind of the merchant related expenses. This could be kind of a PayPal, eBay, Shopify commission, or most likely if you're an Amazon seller, it's going to be that 15% merchant commission to Amazon for facilitating the transaction. You may also have some inventory adjustments, and you may choose to put some other inbound freight and those other kinds of things in cost of goods sold. But in its simplest form, this is what I like to see cost of goods sold looking like. Now, let me back up a little bit. I'm going to show you what it looks like on another version of a P&L, and then I'm actually going to show you how to calculate it over here on the right-hand side. So again, remember, it's really important to keep this cost of goods sold section pretty clean. The most important thing is that if I were to sell $1.2 million in product in a given year, I want to make sure that I'm expensing the actual units that I sold. That's the definition of what's called accrual accounting, is I want to match my expenses in the month that I actually sell the units instead of being in the month when I have to actually purchase the goods. So cash basis accounting is when I expense things as soon as I spend the money. I had to stroke a check to my factory supplier. That's cash basis. I'm expensing it before I've had the chance to sell the goods. We're not a proponent of that at Seller Accountant. You like to have accrual accounting so you can see what your actual margins were in a given month. And so that'll allow you to calculate your gross profit. Below the gross profit line, you're going to have some information related to advertising that'll teach you how effective your business is at generating profit. But now let's kind of get technical here for a second. Okay, Tyler, how do I actually calculate cost of goods sold per unit for the products that I'm selling? And so let me just show you how we do it. All right, so we have 6 different SKUs in our portfolio here. SA is cool, 1, 2, 3, and profit is great, 1, 2, 3. And here's exactly how I would view this. All right, we purchased, let's just pretend that our container can hold 3,000 of our units, and they're split across our 6 units, kind of as you can see here. Now, the factory is going to quote us a price for how much, for the SA is cool 1. They've quoted us a price. It's a pretty hefty unit that we're buying here, $153 and some change per unit. So bought 65 of those, which led me with a $10,000 invoice for that SKU. Hope you're following here. And so this column in here is I got a total single invoice from my factory for almost $70,000 down here. Right, I'll highlight that so you can see it. So we got an invoice for $70,000 from our Chinese supply chain, split 6 ways across our units here. But what we want to do in our accounting is we want to actually add in some of these other ancillary expenses over here, the duties, the ocean freight, and the tariffs. We're going to load those expenses into our cost of goods sold so that we can come up with what's highlighted over here on the right-hand side called landed cost of goods sold. Hope you're following me here. And so there are two different ways to load additional expenses into your units. The first is illustrated by my duties column and my freight column. So for duties, my total duties bill was $688. I don't have the data or the interest to go try to figure out exactly how much of that 688 should be applied to each of my 3,000 units that I purchased. And as a result, I'm going to take a shortcut. I'm going to take $688. I'm going to divide 688 by the 3,000, and it gives me exactly 23 cents that I'm going to load into each unit so that I capture those duties just a little bit per SKU that I buy, per unit. I did the same thing with ocean freight, where I have clients here because of the supply chain meltdown that we've kind of seen here in the first and second quarters of 2021. That used to cost them $5,000 for a container. Now it's $12,500. So I'm going to take that $12,500 and I'm going to choose to just split it evenly across the 3,000 units, which gives me $4.17 per unit. And so, but for the tariffs, I've done this differently. What if the tariff was a rate? What if for this category, I always had a tariff of 7.5%, which is one of the potential category rates for a Chinese tariff? I could take the factory invoice or the factory cost per unit and just multiply it times 7.5%, right? And so I know that for each of my products, I'm going to have a 7.5% tariff. And so you can load your expenses into your COGS either proportionately, which is what I did with these first two, or based on some already known percentage. And so that's what I did here. And so then for the landed cost of goods sold, literally for this 169.78 here, I've just taken the 153 plus my 23 cents per unit for duties, my 417 for ocean freight, and my 1154, and it's given me the total value of that unit that I'm going to expense once I sell it. This piece of data here, this $169 and change, is so important for me to understand because this gives me the power to price my products appropriately. I need to sell this thing for triple this in order for this to be a profitable product, right? And so that's how we calculate it. And so then to kind of bring this down to a cash cycle standpoint, right? So we have our $69-ish thousand in factory plus our bulk bills that we got from customs or from our freight forwarder. And it means that we spent a total of $87,000. So that's just these numbers up here, the total numbers. And so here's what our cash cycle looks like. We had money or we had a credit card or something like that, and we made purchases. This entire pile of stuff that's right up here is the definition of a purchase. We've made a purchase, and we've loaded all of that purchase, the $87,000, into an asset called inventory on our balance sheet, and we're going to wait until we actually sell those units on Amazon, Shopify, or wherever we're moving the units. And as we sell them, now we're going to expense them via that cost of goods sold section of our profit and loss statement. So I know this is a little bit technical here. I hope this makes sense. But basically, the most important things you can do are to make sure that whatever goes in your inventory asset needs to be the exact same variables that are on your chart up here to calculate that landed value per unit. And then you just want to expense that landed value per unit every time you sell a unit. I don't do it every day. You do it once a month to make sure that your books are accurate. So I'm going to leave you with that. Ultimately, what we're looking for is a clean cost of goods sold section of our P&L. But within that cost of goods sold section, the most important attributable GL account is actually just product cost of goods sold. I've showed you how to calculate it using a simple spreadsheet. Have a great day. Take care.